Tara Sation, business lead of Stripe Treasury. The name of this talk may say embedded finance, but what we're really going to talk about is how platforms are uniquely positioned to solve their users' financial pain points whilst improving the platform's own business economics. We're going to cover it in three parts: what's embedded finance, Stripe's solutions for loans, financial accounts, and cards, and how Stripe significantly reduces the complexity for platforms to offer these services. So let's dive in with how embedded finance is changing the game. 2 years ago, Andreessen Horowitz predicted that every company would eventually become a fintech company. What did they mean? SaaS businesses that serve a specific industry would expand their product suite to more holistically solve their user needs by adding financial services as an integrated part of that overall experience. To illustrate how a business could do this, let's walk through a SaaS platform's evolution. Most platforms start by earning revenue through subscriptions or advertising. Many of these SaaS companies are focused on a core set of users in a specific industry and solve their problems really well. For example, imagine a business that's created appointment software for salons and barbershops. The second version of a SaaS platform's evolution adds payments into their core solution, allowing their users to accept money on the platform. This makes the software even more powerful for users. So in our example of appointment software for salons, salon owners can accept payments from customers alongside managing bookings. But accepting payments is just the first step of embedded finance. The third version of a SaaS platform's evolution is adding more financial services into the product experience. It could be lending, cards, or financial accounts, depending on what the platform's users need. These services are part of the overall experience, making it easier for users to do everything they need with one solution. In the past, a salon owner could access loans, pay bills, manage bookings, and accept payments through various tools and financial institutions. Now, salon owners do all of these things through one tool. The platform has evolved from a useful point solution to the business operating system for the salon. Okay, so that all sounds good, but how does this work in the real world? Let's look at Shopify as an example. Shopify offers an easy-to-use, all-in-one commerce platform, allowing anyone to start, grow, and manage a business. In the past few years, Shopify has integrated more and more financial services into the software, evolving to a comprehensive solution. Most importantly, Shopify's users don't think about these financial products as separate from the core commerce platform, nor separate from one another. Their merchants don't think of them as products like lending or payments. They think of them as part of Shopify. Industry insiders have noted that Shopify has grown to be known as much for fintech as for their core software. We're seeing more and more platforms move into this third version of their evolution. What's driving it? Well, software has become verticalized. 76% of businesses use an industry-specific platform, and I mean truly industry-specific. For example, Slice is software that's built just for pizza parlors, so they can handle things that a generic business tool wouldn't cover. They call their product pizza-specific tech. Because Slice understands so much about the pizza business, it can uniquely solve their users' pain points. A vertical-specific solution like Slice means that pizzeria owners can focus on what's most important to them, which is making the best pizza possible, and not the exact right way to optimize a pizza menu to show up in Google searches. But financial services are still one-size-fits-all. Most SaaS platforms serve SMBs, a group traditionally underserved by financial institutions. SMBs tend to be cash constrained with overall pretty low operating margins, so banks don't know how to build for these businesses and rarely have the right data and understanding to take an educated risk on them. To get a loan, SMBs can spend about 20 hours filling out applications and still have low approval rates, and 40% of them use personal credit cards for business expenses. The traditional financial system simply wasn't built to be the best solution for a very specific user. Meanwhile, software continues to become more and more tailored for the specific user's needs. It's the confluence of these two things, financial services and specific vertical solutions, that allow platforms to create something greater than the sum of its parts. Not only can platforms give users access to financial services they may not have had easy access to before, but those services can be married with existing product experience to make something more useful. For example, with financial accounts and sales orders in the same place, a construction management company like Honest Buildings could automatically reconcile every invoice for their users, instead of having an accountant do it manually. SMB owners shouldn't have to deposit a check here, take payments there, get financing in a different place, and then use personal accounts for purchases. When all of these services are in one place, deeply integrated with one another, platforms end up creating a much better product experience for their users. But embedded financial services doesn't just give users a better experience, the platforms see real benefits too. Every platform cares about improving their customer acquisition cost to lifetime value ratio, LTV, CAC. These financial services can be unique market differentiators that help attract new users. And platforms can market these services to users they've already acquired, making the marginal CAC for financial services next to nothing. When it comes to LTV, there are two ways to improve it. Either the user stays on the platform for longer, or they use more of the product. Financial services helps with both. It essentially creates a software ecosystem for the user, expanding the platform's flywheel to provide useful features that also make the product stickier. These services also differentiate a platform's revenue to be subscription fees plus financial services, strengthening their overall business model. It's estimated that SaaS companies can increase their revenue 2 to 5 times per user by adding financial services. So there are clear benefits for users who have access to financial services embedded in their verticalized software, and of course, clear benefits for platforms who offer them. But how do you get there? That's where Stripe comes in. Kareem's going to tell you more.
Thanks, Tara. I'm Kareem, Head of Financial Products at Stripe. I lead the strategic vision and execution for our product and engineering teams working on financial products. Now, chances are most of you think of payments infrastructure when you think of Stripe. Stripe has created the easiest way for any business to accept payments with our powerful and easy-to-use APIs. In 2012, we launched our payment solution specifically for platforms, Stripe Connect. Stripe Connect is a set of APIs and tools that enables platforms to facilitate payments to their users, whether they're a SaaS company, a digital marketplace, or an on-demand platform. Stripe Connect embeds a payment solution directly into their product. And like Connect, our APIs for our financial products, Stripe Capital, Stripe Treasury, and Stripe Issuing, give platforms the ability to integrate financial services directly into their product. This is embedded finance. The products available through Stripe Capital, Treasury, and Issuing drastically reduce the overhead and complexity of the financial system to make it really easy for platforms to offer loans, cards, or financial accounts. Let me walk you through it. Let's start with Stripe Capital, our lending API. It enables platforms to offer access to fast and flexible financing that helps users grow their businesses. Many small businesses struggle to get competitive loans, especially if it's difficult to underwrite their business. Stripe Capital removes that with a complete lending program through a single integration. Platforms can use industry knowledge with payment data points to offer access to tailored loans. Okay, that sounds cool, but what does it mean in the real world? Jobber is a software for the home service industry. Cleaners, plumbers, and landscapers use Jobber to run their businesses, which are underserved by traditional lending solutions. Jobber fills this gap with Stripe Capital. They've created a lending program tailored specifically for the home service industry. And because Jobber also uses Stripe Connect for payments, their users' loans are automatically paid back through a percentage of sales. Jobber gives its users access to loans they may not have been able to get otherwise, and it automates the repayments. Stripe Treasury, which we launched last year, essentially provides banking as a service. It enables platforms to offer their users accounts to hold funds, pay bills, earn interest, and manage cash flow. With a single line of code, platforms can create full-featured accounts eligible for FDIC insurance. Let's pause for a second. Did I just say you could spin up a financial account with a single line of code? I guess that's yes. Opening an account used to be a hassle. Now, it's one line of code. Stripe Treasury is built with a network of banks, providing the infrastructure platforms need to embed financial accounts into their product. We handle upfront bank negotiations, most compliance processes, and regulatory requirements. Now, even though I talk about this all day, real-world examples always help me understand it a bit more. So let's look at Mbrook. Mbrook is a software platform that helps farmers and ranchers manage their finances. Their mission is to help farmers be more profitable and sustainable. And one way to help is by giving farmers a faster and easier way to find and apply for farm assistance. Mbrook is using Stripe Treasury to create financial accounts for their users and shorten the time it takes for farmers to access their funds, which means that they can more quickly put those funds to use and better manage the cash flow. And finally, there's Stripe Issuing, a set of APIs that allow platforms to create, manage, and distribute virtual or physical cards. Previously, it could take months for a platform to create cards and send them to users. With Stripe Issuing, it takes seconds for virtual cards and 2 days for physical cards to get in the hands of their users. And Stripe puts platforms directly in the authorization flow so that it can make real-time decisions on every charge. Stripe Issuing is a cool product because there are so many ways platforms can use it. Let me give you a couple of examples. Stripe Issuing is a core part of Postmates Business, an on-demand delivery service. Postmates couriers deliver food to hungry customers, and the couriers use Stripe Issuing cards to pay for orders when they pick them up from restaurants. Because Postmates uses Stripe to accept customer payments and issue cards to their couriers, funds from a customer transactions can be immediately accessed on the courier's cards. Postmates then programmatically sets restrictions to make sure the cards are only used at the restaurant and location of a customer's order. Bench is a bookkeeping service for small businesses whose mission is to help entrepreneurs master their financial lives. Bench sets the users up with a team to run online bookkeeping, tax filing, and reporting. This service is much more powerful with a detailed real-time view into expenses. So Bench is using Stripe Issuing to offer the users an expense card as part of the toolkit. Bench users can easily combine their finances with their bookkeeping, so they're no longer reliant on importing data from other banks. By putting important pieces of their finances in one place, Bench users get much better reporting and insight into their business's health. Each of these products offer APIs that are building blocks for platforms to combine in different ways, depending on what the users need and what makes sense for the platform's business. Over time, we've seen some common use cases across different industries. And to make embedding financial services even easier, we've created prepackaged combinations. Our new payout card is exactly that. One integration to use both Stripe Treasury and Stripe Issuing to create financial accounts and issue cards for on-demand platforms to pay drivers, sellers, service providers, or contractors. We also handle the onboarding and management for the financial accounts, so platforms don't have to. And on top of that, Stripe provides support for the end user. Now, all of that is really great, but what I get most excited about is that when Stripe accepts payments and issues cards in the same ecosystem, money can just move faster. Contractors can spend money within minutes of earning it, which is a huge value to both the contractor and the platforms. It's fun to get into the details with this kind of thing. So let me explain how it works. When a contractor fulfills an order for an on-demand platforms, the earnings are sent to their Stripe connected account. Now, normally, the contractor would transfer those earnings from their connected account to an external bank account. Before they can access the funds, they either have to wait 2 business days or pay a fee. to get it faster. But our payout card keeps the earnings in a single ecosystem. This time, when a user's earnings are sent to their Stripe connected account, we're able to move those funds faster than the traditional banking system, so that within minutes, their earnings are available and they can spend them using their issuing cards. No fees, no transfer delays. When the funds are in one system, it's simply a ledgering event. Tara's going to show you how it works.
Thanks, Kareem. Let's take a hypothetical marketplace called Rocket Rides, where people in a rush can get connected with jetpack pilots who will get them to their destination fast. Kim is a pilot with Rocket Rides, and she sees they're now offering a card that will let her access her earnings faster. Rocket Rides is also offering a promotion, so any pilot who signs up today can get $50 in their account. Sounds good to Kim. She clicks the offer and is taken to a sign-up form. Since she's already shared a lot of this information with Rocket Rides, she only has to confirm everything looks good and enter in a couple additional details. She submits her information and gets her jetpack ready for flights later that day. Okay, that all seemed really simple, especially for Kim. Let's see how it worked for Rocket Rides on the back end with our APIs. When Kim submitted her information, Rocket Rides created a way for Kim to store money powered by Stripe Treasury. She now has an account and routing number. Rocket Rides also used Stripe's webhooks to know as soon as her account became fully active. Then they immediately set Kim up with a virtual card using Stripe issuing and transferred $50 into her account. So in just a couple of API calls, Rocket Rides created a financial account for Kim, issued her a card attached to the account, and put money into the account to spend. What used to take at least a week happened in a matter of seconds. Okay, back to Kim. She gets an email from Rocket Rides that her account is ready with a $50 promotion. When Kim clicks the link, she's redirected to her account where she can activate her card. She redeems her $50 reward and adds the card to her phone so she can use Apple Pay. It's great timing. Kim is on her way to pick up passengers when she notices that her phone battery is getting low. She'll need her phone to complete her flights on Rocket Rides. So she uses her card to buy a portable phone charger she can pick up on her way to the airport. As Kim completes more and more flights, Rocket Rides uses the Stripe API to route earnings into her account, which she can spend within minutes. And if Kim ever has a question about her account, Stripe provides first-tier support and online account management. And that's it. For Kim, this is an easier and better way to spend and store money in the same place that she earns money. It just makes sense. For Rocket Rides, they have the ability to spin up full-featured accounts eligible for FDIC insurance and create spend cards attached to those accounts, all with simple API requests. Okay, that was a lot about what Stripe does, but what does it mean? Why is this so important to us? Well, it's all about reducing complexity for businesses. Our goal at Stripe is to build the economic infrastructure for the internet, and payments are just one part of that. Accepting money shouldn't be difficult, but neither should be getting loans, financial accounts, or cards. We've reduced the complexity for both integrations and compliance for these services, so fintech can be a part of the vertical SaaS ecosystem. To see where we're going, I want to take a minute and look back. 10 to 15 years ago, it was really hard to start a software company. In addition to finding product market fit, there was infrastructure and logistics to deal with. You needed physical servers and cable management, all of this overhead that had nothing to do with the actual business you wanted to create. Of course, today, that infrastructure is handled by companies like Amazon Web Services. Now, when you start a software company, you use these services so you can focus on your idea and core product. These infrastructure services have drastically lowered the barrier to entry so that it's faster and cheaper to launch a software company today than ever before. And that's what we're doing with financial services. Stripe creates the financial infrastructure companies need to quickly, easily, and inexpensively integrate financial services into their product experience. We take care of the product complexity and regulatory requirements for loans, financial accounts, and card issuing, and significantly lower the barrier to entry for platforms to create a product ecosystem completely tailored to their users' needs. The cost of offering these services becomes affordable, the complexity is simplified, and what used to be impractical is now attainable. And that's how we think about embedded finance at Stripe. That was a lot in a short time, so here's what I most want you to remember. 1. Embedded finance helps platforms and their users in meaningful ways. 2. Stripe has leading solutions for loans, financial accounts, and cards, including our new payout card that makes it easier than ever to embed financial services. And 3, we're doing something really unique. It used to be a massive undertaking for platforms to offer any of these services, let alone all three. And now, well, it's not. Our infrastructure reduces the complexity and makes embedded finance attainable for all platforms. I think you can tell we get pretty excited about this stuff. If you already know what you're looking for, explore any of Stripe Capital, Stripe Treasury, or Stripe issuing products on our website. And if you love the idea of embedded finance but aren't sure where to start, reach out. We'd love to talk with you.